Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. We had a lot of data on Friday before closing this week, PMIs and inflation expectations from the US. Now, PMI indicates how well an economy is doing basis surveys taken from inventory managers or business heads. For the US, the ISM manufacturing PMI actually came lower. But let's find out whether markets think these were even significant. Good morning, JK. Your thoughts on data released on Friday and what theme do you see playing out this week?
Good morning, Swaraj. Yeah, ISM is an important number, of course, because it has some forward-looking data, and that is what the market generally tends to look at. The forward-looking new order index actually dropped to 49.2, in February, after rebounding to 52.5 in January. So there is some indication of a slowing economic activity or the order book, which the market was looking at. Even the employment component fell to a 7-month low of 45.9 from 47.1. So these are the points that market were looking at. Now, apart from this PMI, we also had the Michigan Consumer Survey Sentiment. Again, that fell short of the initial estimates from 79.6 to 76.9. And even the future expectations came down from 78.4 to 75.2. So this is the reason why the markets actually took a dovish view, particularly on the rates, and the yields got received. Bond prices went up, and interestingly, the Atlanta Fed's GDP estimate, which the Fed relies on more, is now at 2.1% for Q1 of 2024, down from 3% earlier. And again, just look at the backward-looking December quarter data, which came at 3.2%. But this is the number that the market looks at because this is actually what's ongoing estimate. So these are the reasons why you find that the yields were coming off on Friday, and the dollar also came off a bit. There was another reason why the dollar came off, because the eurozone inflation also surprised to the upside compared to the what we had estimated based on inflation from individual countries like France, Spain, and Germany. The core inflation, in fact, was at 3.1% above the 2.9% expected. We all know that central bank in Europe is also expected to bring down the rates, but they are actually also pushing back against the market expectation, stressing they need to see the wage negotiations to conclude before they have a clear picture of the domestic inflation pressure. So euro found very good support at 1.0810, and that, along with the somewhat mixed US economic data, led to the dollar getting sold off a bit, not much, but about 0.25%. But importantly, it did not break 104 and stay about 104 again as far as the dollar index is concerned. Very, very interesting moment in gold on Friday. It rose very strongly, gaining as much as 2.35%. Although there was no specific strong trigger on that day. The close about 2080 is the second highest after October 13, 2023. And the bullish breakout is likely the beginning of a run that can see gold reach new highs, particularly if the employment data later this week comes weak. And the immediate target, of course, is 2100. The reasons why I would think the gold suddenly rallied instead of, in the absence of a specific trigger, was that the gold had held the support below 2000 consistently, and the Indian US yields had not risen despite the CPI, PPI, and PCE inflation, all of them coming, higher, but still they were looking at the economic indicators that were also come somewhat slower. And interestingly, the Fed Governor Waller, who normally kindles hopes for lower interest rates, said that decisions on the ultimate size of the Fed balance sheet have no bearing on its inflation fight policy. We could see that the yields were coming off, and the dollar was also a bit softer against the major currencies, and the gold, of course, gave a technical breakout. Now, what we look forward to is that Powell walks into the Senate Banking Committee this week to face a lot of questions on why rates are held high in spite of inflation falling substantially from higher levels. Then we also have the events like ISM services. Services are important because that forms 85% of the US economy. The key inflation data for Japan's Tokyo region, ECB meeting on Thursday, and of course the unemployment data from US Capsitol on Friday. Expectation that the number will be somewhat lower. Yes, of course, non-farm payroll numbers always have a habit of surprising the markets, but definitely, last month's number was a big surprise on the upside, and we may not expect such a high number. But let's keep our fingers crossed. But all said and done, there are lots of data to digest this week as well. Coming to the stock markets, Nikkei hit a new big landmark of 40,000 today, trading at 40,100 plus. The S&P 500 and our own Nifty also hit new all-time highs last week. Coming to our own rupee, it's been generally following the dollar index direction. But even as the dollar index itself is not having a big momentum to the downside or the upside, rupee is also trading in a very narrow range. Market still experiencing a lot of inflows. The inflow for the month of, for the year 2024 has been to the tune of 3.5 billion already. And, it follows a very strong year of 2023 when we had big flows. RBI is fighting off big strength in the rupee, absorbing a lot of flows. Of course, importers are also buying above 82, 80, presuming that this range will hold. But if the dollar index falls much more, then I wouldn't be surprised that RBI allows a bit more strength in the rupee, in which case we will be heading towards 80 to 70 and ultimately 80 to 50 as well. Thank you. Have a nice day.
Thank you, JK. And just to quickly summarize the ISM data, which was released on Friday, even though the number was lower, we have to look at the forward-looking indicators like the new orders index, which actually dropped in February after rising in January. So markets have taken a dovish view post this data, and we saw some fall in yields. Even the eurozone inflation, it surprised on the upside despite individual countries posting lower numbers. So euro found a good support around 1.0810, and of course the mixed data from the US economy led to some sell-off in the dollar. Now, gold had a golden rally, second highest close in gold, closing above 2080. And of course, the key events to look forward to this week would be the Powell's testimony, ISM services related data, ECB meeting on Thursday, and unemployment data from the US. For rupee, we have been generally following the dollar index direction. As of now, even dollar index is directionless. So, uh, rupee possibly can be taking cues from the dollar index. So very narrow range, markets still experiencing a lot of inflows. 80 to 80 has held, but if dollar index falls, we can see some strength in rupee. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.